What's going on, guys? Hey, some very exciting news today. I apologize that I got a hat on and that I'm in my bathrobe. I'm cold. I feel super sick, but it's too exciting to not make a video because we broke $1,000 today. So, very exciting stuff. We're gonna just dive into the tracker really quick. We're at $1,000 after $50 a day invested, which is awesome. Let's take a look at the tracker and kind of see where everything's at. All right, so this highlighted line right here. Today is January 18th of 23. My weight is at 291.4. We're starting to move right in the right direction. For a total weight loss this year, 7.3 pounds. And here's the good stuff. All right. Investment balance, $1,009.49. All right. So we did it. We've made it. We're at $1,000. We are a four-figure trading account. So super exciting. Dividends earned, we're still at $1.46. It's the first month. It is what it is. Total growth, we are down $4.90 in the account now, and I am so happy that we're finally down a little bit. We'll get into that in a minute, but I couldn't be happier with being down because that is where the uh, daily dollar cost averaging into the market shines. So we'll get into that in a second. YouTube income, again, that's a long ways away. But our subscriber count, we're halfway to where we need to go. So we only need 1,000 subscribers to get monetized. Obviously, we need some watch hours on that. So people have to watch the videos and whatever. But if one of our metrics to get there is almost there, halfway there, that's really motivating. Total views, we're at 18,140. I haven't posted any new shorts today. I made one last night or yesterday about like how to cook a good omelet because I make pretty good omelets. But aside from that, I haven't really posted anything just because I've really felt pretty sick. And then the total watch hours, this is super bizarre, but it's 231.7, whereas the last update it was 213.7. So that's kind of weird, but yeah, that's a real update. So there it is. All right, let's take a look at real quick, just a snapshot here. This is our Sofi account, guys. If you are looking for somewhere to invest, I have a link where you can get some free stock down in the description. You only need to put in $10 into a newly funded trading account with Sofi to qualify for that, which is pretty sweet. But here it is. We're at $1,009.49. So pretty stellar. As we come down here, you can see some of these things we've lost a little bit of money on, and that's why I am excited because it just means it's on sale. So we're going to dive into Seeking Alpha, and I'm going to walk through a little bit of like why I'm pretty stoked that specifically Procter and Gamble and Pepsi, two reasons why I'm really excited that those guys are down. I'm kind of hoping they continue to free fall. That would be the best case scenario for this portfolio. But let's take a look. And here we are. Okay. So this is Seeking Alpha. Let's just get rid of that thing. So we're on Seeking Alpha. And I want to talk about why I'm so excited that the year-to-date performance of specifically Pepsi and Procter and Gamble are not as good as everything else. So this is our year-to-date performance. So since we started the portfolio to now, if I sort this from the best to the worst, right? We have MPW, that's the medical properties thing that I've been talking about, right? We've got BlackRock, we have O, which is Realty Income Trust. That's another real estate thing. We have T-Mobile. T-Mobile. Sorry, I'm not feeling great. We have AT&T, ticker symbol T. Should have been T-Mobile. They messed that up. And we're just going to skip down to the bottom. Procter and Gamble is losing money, and Pepsi is losing money. But see this right up here. It says years of growth. This is the dividend growth, right? So there's a phrase in dividend investing where they call it a dividend aristocrat. All right. I'm not talking about the movies with the singing and dancing cats. We're talking about dividend aristocrats. So, what is that, right? What is a dividend aristocrat? So, it's basically a stupid fancy term that somebody made up and it's stuck. I don't know where it came from. But it's a stock that's in the S&P 500, so one of the major trading indexes, right? So a stock that's in the S&P 500 that has continually grown its payout or dividend payout every single year for the past 25 years. So for at least the past 25 years, it's grown what it pays out its investors regardless of the stock's price. All right. That's the key thing here. When you look at Procter and Gamble, they have 66 years of consecutive stock or dividend growth. Pepsi, 50 years of consecutive dividend growth. All right. Why is that important and why do I want the stock to go down? Simply this, right? If I can pay less money for something that's going to pay me 50 bucks, right? Just for a random number. Let's say I can buy this cell phone and it pays me 50 bucks every day. Okay. Now, if I can buy this cell phone for 1,000 bucks, which is normally what it costs, and it pays me 50 bucks every day, that's great. Right. But if I can buy this cell phone for $80 and it pays me $50 a day, that's just a better deal. Like I could buy more of this cell phone and earn more payments. So that's kind of what we're talking about here is these two stocks historically have grown what they pay you out for at least the past 50 years, right? Regardless of what the stock is worth. So if I can buy more of it for cheaper, I'm in, right? We're after those dividends, guys. We're after getting paid every single quarter, every single month from these different things. And we're going to see that grow pretty quickly, which is kind of awesome. So, getting these on sale and having these go down is a good thing, because they're still going to pay me $3.65 a year for Procter and Gamble. It doesn't matter if the stock is $100. It doesn't matter if it's $200. They're most likely going to pay me $365. So I'd rather pay less for that than more, right? That's really what we're talking about. So good to see those two dividend aristocrats kind of dipping down in the price. As you look at the forward projected yield in our past videos, we've gone over this, but this is what you're expected to get paid percentage wise of your holdings. So like if I had $100 in JEPQ, this highlighted line, 16.22% is $16.22, right? So if you come down here, you can see that Procter and Gamble is one of the lowest paying forward dividend yields, right? So it pays out very consistently, but to get that consistency, it pays a lower percent of what the stock's value is. So as that stock value goes down, the forward yield percentage goes up. And that's really what it's all about, guys. Sorry if I'm rambling a little more than normal. Hopefully that's good information. With that, I become one of those people who's waiting for the stock market to go down. And that's because every single day that the stock market goes down, my average dividend yield goes up. So it's pretty awesome. It's an optimistic way to look at it. I'm excited to see that move in the way that I had hoped that it would. Also, my copy of Atomic Habits just came in. So we're going to be reading that this month. I'll have a link down in the description for that if you want to buy it. And, by the 15th of February, we're going to do a little book review, a little book club action in the comments. Should be pretty fun. Maybe you guys took something away from it, and I'll go with what I'll post a video, what I took away from it. But happiness, health, and wealth. Let's don't just take it from me, take it from the people who write the books that win all the prizes and stuff. You know what I mean? So let's do that together. I got to grow my perspective as well. So hopefully, again, we can all do that together. But with that, I wish you best and roll the outro.